Hi, thanks for tuning in for another episode of Ask Spurrell CPA. Today we're talking about your accounts receivable aging summary. I have May here with me again. May, thanks for joining us again. And May just made it through her first T4, T5 season. How was that?
It was extremely busy, a lot of hard work, but I cannot wait to do it again for next year.
Excellent. So the quote that we have for you today, it's Michael Gerber quote, author of our favorite E-Myth here. People who are exceptionally good in business aren't so because of what they know, but because of their insatiable need to know more. The statistic that we're always trying to solve here are 50% of Canadian small business go out of business. And one of the top 3 reasons why that happens is they simply run out of cash. And the story that we have are business owners who, they're depending on collecting from their customers to pay their bills, meet payroll, not run out of cash and become a statistic, but they don't have confidence in that accounts receivable aging summary in QuickBooks, and that makes it more difficult to collect because they don't have that balance at hand that they can use to call up to clients and collect efficiently, provide statements, issue statements to clients. So it comes down to that reliability of that accounts receivable aging summary. It increases the efficiency of your collections. So May, what are the questions you think these business owners should be asking?
Well, what is an account receivable or an account receivable aging summary?
Yeah, so the accounts receivable or AR aging summary is effectively a list of all the customers who owe you money. And then it lists what amounts they owe from what time periods. And then it totals the amount that each customer owes you. And then it totals, a grand total at the end of what all the customers owe you. So more specifically, if you're looking at the sheet on the far left-hand side, it lists all of the customers who owe you money. And then in the next column, it'll be all the customers who owe you money but aren't past due. So we'll call it the current column. And then we have, the next column is all the customers that owe you money but they're 1 to 30 days past due. And then the next column, all the customers who owe you 30 to 60 days past due. After that, all the customers owe you 60 to 90 days past due. And then after that, all the amounts owed that are 90 days or more past due. So again, it lists all the customers at the end and what amounts they owe from what time periods. And finally, at the end, it has a total of what each customer owes you. And then again, reaching a grand total at the bottom.
And why are accountants always skeptical of items in the 90 days past due column?
Yeah, most contractual arrangements don't provide for 90 days to pay the person. So most contractual or more than 90 days. So most contractual arrangements are, they're net 30 type terms, so you have to pay them within 30 days. Sometimes it's 60 days, you get 60 days to pay. Sometimes you get 90 days to pay even, but it almost is never more than 90 days. So when we see an amount that's, that a customer is owed for more than 90 days, now we start to wonder, are they ever going to pay it? The likelihood of them paying starts to go down because they've usually broken the contractual terms, and now it's, is it worth litigating? Maybe there's a reason why they didn't pay, they weren't happy with the work. But in any event, that amount is the collectability of that amount is now in question.
What does a negative number in account receivable aging summary mean?
So a negative number in accounts receivable aging summary means that someone is prepaid. It's like a deposit. So this isn't impossible, but it's out of the norm. So the norm is, someone, you do work for someone and you create an invoice, you bill them at that time, then you have a positive AR. So you do $1,000 of work, then you have $1,000 showing in your AR aging summary under the current column for that customer. And then that person issues you payment, and that creates kind of a negative $1,000 in that in the subledger in the background, and then it goes to zero. So it starts at positive 1,000, then we minus 1,000, then it goes to zero. That's the normal sequence of events. But there's nothing to say that the deposit can't precede the work being done. So they can make a payment before, or maybe they've made an overpayment from another period. They owed 1,000 and they paid 2,000. So that creates a negative amount, but it effectively means that a payment has been made for work that's not yet done. So this isn't impossible, but you should have a good understanding of it when you're looking at your AR aging summary. If it is a negative number, did I get a deposit? Did I get an overpayment? If not, we got something we should look into.
Should you be skeptical of round numbers in the AR aging summary?
Yeah, round numbers in the AR aging summary, sometimes they're estimates or accruals or some sort of journal entry or placeholder. Now, it's not impossible, it's fine, but often those round numbers in the AR aging summary, we have to be skeptical, and we have plus $10,000. What was the last time you did a project and you sent a bill for exactly $10,000? No pennies, no single dollars, just exactly 10. What was the reason for this? It's not impossible, but it should draw your attention to it, and you should have a very quick and simple explanation. And if you don't, lots of times it's not an actual amount.
And should you be skeptical of shareholder or related party amounts in the summary?
Yeah, they shouldn't be there, really. So really, if you have a shareholder or related party amounts, first of all, you're definitely going to have a shareholder loan account. So there's no need to have a shareholder loan account with some of the transactions in, and then convolute your accounts receivable account with other shareholder amounts. Keep all of the shareholder transactions in and out in the shareholder account. Just have one balance. And then it comes to the related party. Really, if this is a related party, corporation where husband owns one corp, wife owns the other corp, or both corps are owned in the same household, that related party should have its own account again. It shouldn't be again convoluted with other AR accounts receivable amounts from arm's length customers. So there's no reason to create that sort of complexity. Those amounts need to be separated. They shouldn't be showing on your summary or in the AR account.
Should you be skeptical of payroll or CRA amounts in the summary?
Yeah, same thing. You have payroll accounts. They have their own accounts. We have a payroll liability account. We have an employment expense account. We can have an accrued payroll account. They shouldn't be in your AR summary. There's no reason to take the amount you overpay from CRA and stick it in your accounts receivable aging list. It doesn't belong there. You already have a payroll account. You use it to deal with all the payroll amounts, one running balance all the time, nice and simple. That's the way to handle it.
Shouldn't all amounts relate to actual cash expected to be received?
Yeah, so if you see a positive number on that AR aging summary, you got to ask yourself, is this an actual number that is going to be received in cash at some point? They're going to write me a check, they're going to give me their credit card information, they're going to drop off the physical cash, whatever it is. When you look at that positive number on the AR aging summary, on the accounts receivable aging summary, is this a real amount that's going to be collected in cash? If not, we've got to make a correction.
And what does it mean when you see a positive and a negative amount for one customer?
Yeah, so you'll have, let's say you have a customer A, Mr. and Mrs. Smith are customer A, and then in the current column they have a plus $1,000. But then in the 30 days past due column, 30 to 60 days past due column, they have a negative $1,000. Usually just means we haven't made that payment and applied it. So the accounting software, it's not just you have to book the receipt, but you also have to apply that payment to a specific invoice. And if you don't, it'll just create like a positive and negative, and they'll show up. It also could just create a zero. Sometimes you'll see Mr. and Mrs. Smith sit on there and their amount is just zero. That means the positive and negative just occurred in the same period. And so it's not clearing them off the list, because it still shows that one balance is owing, but they have an offsetting negative, so the total is zero. But so you have to record in most accounting software that you received it and that particular payment applied to a particular bill.
Can updating the account summary in real time every time you receive payment?
Yeah, you can 100% update it in real time every time. So it's probably the starting point of what most customers need from their bookkeeping software. Even if they're not booking every individual transaction in real time, that can be a little bit overkill. But just using that bookkeeping software, that every time they bill a customer, they invoice a customer, you can import the invoice, and it takes just as long. Often with the drop-down menus you can build into QuickBooks of your different items in your pricing list. It can be even quicker. You can have custom messages, and you can use the software to even email the invoice out to the customer with a link for them to pay it online even. So it's usually even quicker to do the invoicing in QuickBooks if you got any sort of scale on the amount of invoices that are going out. So that can 100% be done. And then when they receive the payment, there's no reason why you can't book the receipt of that payment going into QuickBooks. I would say you're either in the position where you shouldn't be using the QuickBooks for either, but if you're using the QuickBooks to do your invoices, you should be using the QuickBooks to record the receipt of payment. So it's kind of one or the other. You don't necessarily need it if you're super small. You can just use an Excel invoice or whatever. There's not a lot of transactions. You feel you're managing it, but if you feel it's becomes cumbersome when tracking who owes you what, you should be using the QuickBooks software not just to create the invoice, but to book the receipt of payment. And it's a skill that can be taught relatively quickly. There's a lot of things in bookkeeping software and accounting software where it's very difficult or very time consuming to teach people, but that's not one of them. That's one that can be taught to almost anybody, or taught to someone on your staff very quickly. And then you can get a real-time, reliable list of who owes you what money at any given time.
Once you have a reliable AR summary, how often should you reach out to collect?
So I'm going to set some thresholds. So if you're not doing it monthly, your chance of collection is going to go down dramatically. Now that is the bare minimum monthly. I would suggest it's something that you should be doing every time you do your accounting processes. So most people pay bi-weekly. If you're paying your employees bi-weekly, you got to go in, you got to reconcile the bank accounts, you got to see what payments come in, see what funds are available, and then you can run your payroll once you know what funds are available, and then you can pay your bills as well. Why not follow up on all the AR on that same schedule? We create efficiencies by batching those tasks into one function. So as soon as your accounts have been reconciled and you're sure which payments came in, you're also now sure which payments are still outstanding. We should be following up on those. So that's kind of a bi-weekly basis. That would be even better. And then once the account is, let's call it, in jeopardy, that they're now past due, and something is making you think that there's a problem. There might be a problem in collecting it. Maybe that this person is having financial difficulties of their own, or they're not returning the call saying, hey, sorry, I'm going to get it to you in a week or something like that. Daily, go to daily. Don't feel bad about it. You've done the work. The money is yours. A lot of entrepreneurs think, that's what about the client? I'm going to upset the client. I was like, this is a client who's not paying you. It doesn't matter if you lose them. By definition, they're no longer a client. They're someone who owes you money. I would say monthly is the minimum threshold that you absolutely need to follow up, or else the chance of your collectability is going to go down dramatically. Probably a better practice would be bi-weekly. Every time you do your payrolls and payables, it's still really efficient to do it in that sequence. And if there's any chance of non-payment, go straight to daily. Just put them on blast, call them, email them every single day. You did the work. They agreed to it, and now they're not paying you. Don't feel guilty about it at all. So I think that's what we have for today. Thanks so much for tuning in. Please hit that like and subscribe button so we can continue to deliver you tips and help you beat the odds at business. As always, if you have any questions, leave a comment below, and we'll try to address your queries in a future video. Thanks very much.